Good morning, everybody. Welcome to episode 2 of our Dealmakers webinars. Today, we're focusing on bridging finance. And I know there's plenty of other things you could all be doing at the moment, getting a haircut, going to the gym, probably going to the pub. So we really do appreciate you taking the time out to join us today. And I hope that by the end of this session, you're more confident with bridging finance, you've picked up some hints and tips, and you've identified more clients that you can assist and more deals that you can place. So this series aims to get deeper into the details of deals and how they are looked at. So as always, they're only as good as the questions that we get in from you and the panel of experts that we have on offer. So at the bottom of your screen, you'll see a Q&A button. So please send us any questions to that. We'll do our best to answer those questions. We do have a very packed session today, but we will aim to get all of those questions answered where we can. Which leads me on to today's esteemed panel. So I'm delighted to be joined by Gareth Lewis, Commercial Director at MT Finance, Matt Taylor, Regional Development Manager from Shawbrook Bank, and Crystal's very own new Business Director, Toby Breeden. Welcome, gents.
Morning.
So to start us off with then, as this is a deal makers series, so very quickly, gentlemen, can you give us a quick overview on how involved you can get in individual cases? Gareth, can you start us off?
I probably touch almost every single case that comes into MT Finance in some way, shape or form. So the journey, whether it be at the start from the new business side and the BDMs out and about on the road discussing the transaction, through to the back end when we're looking at finalising a deal, smoothing over some of the processes in the backside, when you're talking about legal processes or evaluating the valuation. So a little bit of everything.
Excellent. Thank you. Matt?
Yeah, pretty much the same. I think it's being a BDM, certainly for Crystal and within the Midlands region. We're seeing deals firsthand. We're helping shape deals in the first instance, presenting to credit, and obviously liaising with underwriters to make sure that it's a smooth transaction, smooth journey, but also be clear about what information we require in order to make a concise and quick decision for the broker.
Excellent. Thank you. And Toby?
Yeah, so my daily involvement probably come more on the scale of problem solving, deal structuring, and pointing any of the team members that are struggling with their scenario in the right direction. But yeah, I don't see every single deal, but I do see a lot every day. But yeah, that's my involvement.
Yeah, excellent. So for the attendees and the viewers out there, you can see that the guys we've got on this chat today are actually involved in the transactions that you're going to be sending, whether that's sent into Crystal and dealing with us, and then when they move into the lender, Matt and Gareth will be involved in those transactions as they move through. So we've got some true experts on the panel today, and hopefully we'll be able to cover off most of your questions as well. So Gareth, then first question to you: how busy is the bridging finance market at the moment, and what type of deals are you guys seeing at MT?
Look, I think the market is getting busier. I think there was a stimulus at the beginning of the year, which was around the stamp duty holiday that was looming. I don't think the spike was as big as it had been over previous stamp duty holidays, so in 09 and 16, but certainly the year started well. We're seeing, do you know what? We're seeing a little bit of everything, which is good, because what you don't want to see is just one singular focus in the lending market. You want to see a good plethora of business, whether that be on the regulated side, which obviously we launched at the back end of the year. That's going from strength to strength and is becoming one of our core products now. And then obviously we're seeing things like heavy refurbishment, completing developments, second charges to help businesses, with the Sybil's change just come through as well. That's going to become an even more important factor moving forward as well. So it's good out there. It's not exceptional, but it's good out there.
Okay, excellent. Matt?
Yeah, the short answer, very, very busy. I think here at Shawbrook, the bridging proposition has gone from strength to strength. We cater for sort of modest refurbishments, minimum loan £50,000, right the way up to sort of £25 million developer exit. So a real sort of raft of different inquiries to probably mirror Gareth's thoughts. We're seeing quite a lot of investors sort of try to diversify as well. So looking at commercial property, taking advantage of the planning rules being relaxed last year. So yeah, huge effort from the team, certainly at Shawbrook, and our introducers such as Crystal, which culminates in a record Q1 for us. Extremely busy.
Okay, great. And Toby?
No, it mirrors exactly what both Gareth and Matt just said there. I think, we had our record-breaking completion numbers in bridging, which I think is a testament to the market at the moment. It is very busy. It's just about spotting opportunities within that. The government, as Gareth alluded to, has definitely created a stir within the market. It's just about, obviously, with the new deadline being extended and seeing how the land lies. I don't see it slowing down. I only see it probably building up really as the year goes on.
Okay, excellent. Matt, if I can start with you with this one. There's still a perception that bridging finance is a complicated product. How do you overcome this, and what's Shawbrook's focus during the next part of the year?
I think in terms of complication, that will depend. Look, every client's got a position A and a position B they need to get to. We could sort of, and the way I suggest bridging is actually can simplify and smooth out wrinkles for a case. So position A could be, this is a property, it's not in a lettable condition, or it's not in a position where we could obtain stream or term finance on it at the moment. The bridge will kick in to allow acquisition, to allow refurbishment, and then it will get us to position B, which is ultimately where the client wants to be long term, or get them in a position where they can maximise a profit from selling the asset on. So can be complicated. I think that will very much depend on the structure. It will depend on how the client acquired the property or sourced the property. But the key is the more information Toby, myself, Gareth have got up front, we can then help shape a deal and really sort of come up with the solution for the client and help smooth out that ride.
Okay, thank you, Gareth.
In terms of the focus for this year, it's sorry.
No, carry on.
Sorry.
Carry on.
Part two, yeah. In terms of the focus, it's just it's doing what we're sort of good at really, which is, as I say, shaping the deals, and obviously then we are seeing quite a large uptake as well in the commercial term solutions off the back of that.
Okay, Gareth.
Yeah, look, I think bridging isn't rocket science. It's, as Matt alluded to, it's a solution to a transactional need at that moment in time. I think the perception point of education is a really big thing. I've been harping on about education in the bridging industry since I've been in the bridging industry, and there still needs to be that continual education of the broker community, but also consumers. Because it can have that stigma attached to it that it's complicated because they don't understand it. But the reality is it's inherently a security-driven transaction, so it's property-driven from that perspective. So as long as you can understand the tangible, which is the security, build the mechanics around the client, and then how the loan is going to be repaid, because ultimately it's a short-term transaction, it shouldn't be deemed as scary. As long as you just open your mind to what's being asked for. And one of the other bugbears you get with that side of things is because of the stigma that can be attached to bridging finance, people think that it should be too easy. It should be, here's a loan, here's the details of the loan, can I have my money now then please? Whereas sometimes it's that misgiving nature that they don't understand that actually, as a lender, you want to know who's borrowing the money, what asset are you taking, and I do need to have clear title to be able to do it, or work on the structure of the title. So, trying to forget that bridging finance is a secured transaction on property would be a good thing.
Okay, and what's the focus for MT during the next part of this year?
Look, I think we've been quite clear that we want to obviously get busier from that perspective. So hence the rollout of the product into the regulated arena. So obviously there's a lot of focus in making sure that that continues to go from strength to strength, which it has done, and is supporting that of the broker community on that side of things. I think we're constantly evaluating where the market goes. So we're making sure that all our products then serve a purpose and are fit for purpose as well. Because obviously with everything changing over the coming months in terms of legislations coming through, the lockdown easing, you have to then look at what the customer journey is through your product offering, and does it support what the customer needs at that moment in time. So we continually evaluate where we are from that side of things. I think it's just focusing on remaining good at what we do. Don't lose sight, focus on the simple things.
Yeah, that's really important, especially during the growth phase as well.
Yeah.
It can be easy just to push for more and more and more. So yeah, really interesting from that.
It's hard because sometimes I'm greedy like that. I do want the more, but sometimes you've got to forget to make sure you get it right first before you try and get the more.
Yeah. That makes sense. So Toby, having listened to the areas then that Gareth and Matt have talked about there, what part do you think Crystal can play in this, and why should our audience consider using you and your team?
Yeah, I think it's about identifying the opportunities and understanding what the market is, how the market works, the education piece there that Gareth said. I have to say that is literally the key to all of it. Right the way down to the customer. Now, at Crystal, we do have a highly trained and dedicated team that deals solely with bridging, from our what we call underwriters who assess a case that comes in to the case managers. Now, they specifically deal with that transaction type only. And then a subcategory to that, those individuals, they only dedicate to a few of those lenders. So you're talking about highly skilled individuals who have great relationships with both of these lenders on panel, as well as the rest of our panel that we have in the bridging market. They understand them. They understand the products, the appetite, how it is of today, not what it's going to be tomorrow, not what it was, because that's the biggest problem that you get with the bridging market. It's an ever evolving market. Circumstances externally will always impact lenders' appetite. The team identified that early in the process because we've got great relationships and obviously builds to the right outcome that we want. I would declare ourselves as experts in bridging. We are experts. We know what we are doing. We've done it for a very long time. We are purely focused on completions. Now, with that in mind, we don't charge package fees as a result. I think the other day I saw an article from the ASTL that mentioned about conversion in the bridging market. Now, that worked out Q4 at 14% from application to completion. Now, we are 3-4 times that as a packager, and that's what we bring to the table. And both of the lenders on here will be a testament to that. They know the value of packages. That's what we bring. And without the fee, there's no hurdles. There's a simple reason to use us. Piggyback of our expertise, our relationships to get the deal done ultimately. We don't get paid until it completes. It's a simple model for us, and that's all I can really say without going into spending all day and boring everyone on the call. But yeah.
Just can I touch back on that as well? I think what you talked about there, Toby, is brilliant in terms of the clarity and the vision of that transaction, knowing where it should go. I think we as lenders, as well as specialist distribution, have a job to do to make sure that we don't get bogged down with jargon, we don't get bogged down with gimmicky lending solutions as well, because the more gimmicks that go out there, the more terminology or jargon that gets used in our industry, the harder it looks to enter from a client perspective or a broker perspective. So having that clarity and ease of understanding is so critical.
Yeah, couldn't agree more. So again, back to you, Gareth. So some lenders have a very rigid approach to both criteria and pricing. What's the approach at MT? Is it the guidelines or is it tramlines?
It's guidelines. We're very, very fluid on both our criteria and on our pricing structures around it. You have to give a framework, otherwise, again, you don't give that clarity that I was just mentioning. So you have to have a framework around it. But because of how we are built as a business, we're very entrepreneurial. So we always look at a transaction when it comes across our desk and say, okay, is there a way to make this deal work in some way, shape or form? It might not tick all the boxes, but how do I mitigate my risk? How do I get comfort on that transaction? We're also in a privileged position that we're not reliant on one sole funding vehicle for our transactions as well, which means that diversification that really put us in a good position for last year allows us to place deals in different silos, which means that the appetite on one silo might be slightly different from the appetite on the other, which means, again, every transaction, I truly mean this, every single transaction that comes across our desk, there is always an opportunity to try and do something there. It might not be categorically what the client needed at that moment in time, but there's a deal to be made. And that's the fluidity of our funding structure and then the experience and the appetite around that as well. So it is very bespoke at times.
Excellent. Matt?
Yeah, I think it's important to issue guidelines for the sake of transparency, so that our distributors know exactly what we're looking for, where our appetite sits. Toby alluded to it. We're 2 lenders that you've got on today, but you've got a raft of bridging lenders that you can go to, and you can choose the right deal for the client circumstances. But boundaries are important, but there's plenty of room for flexibility, both within the items that we require on a deal, the lending criteria, and then on occasion pricing as well. Although we do regularly review pricing and feel we're very well positioned in the marketplace at the moment.
Okay, excellent, thank you. So Toby, having listened to that then, can you give us a couple of examples of the best pieces of flexibility that you've seen recently?
Yes, I can. They both happened, I believe, in the last month. Coincidentally, they are both these lenders who are both on here. That is not fixed, I assure you. That is just purely off the top of my head. So there was a great example with MT where we had a deal where there was a pricing, concerns over the valuation being in London. We had concerns over the property down valuing, which means it push it into the next pricing bracket. So if there was an element of a 5% variance, the deal was out, then the pricing would go too expensive, which means the client couldn't redeem the existing facility, which would have impacted the deal completely going ahead. We spoke to underwriters there and we had confirmation from one of the underwriters there that we could actually commit to it if it didn't exceed a certain percentage. So they would hold the rate for us because of making sure the deal and the customer outcome was at the core of the decision. And that flexibility is not something you can get off a product guide. That is not something you can get off anything bar having relationships, understand the processes and preempting what can actually be a problem to this transaction. The key points. But that was really good. The other point comes from Shawbrook. There was a fire risk assessment issue that I believe in a completion that we had in the last week or so. And the issue there is we had a new build. The customer and solicitors both disagreed difference of opinion of whether the fire risk assessment was needed on a new build. However, Shawbrook did take the view of agreeing to complete as long as the fire safety certificate came in, I think within 60 days, was it, Kris? Because I think that was actually your case.
It was, yeah.
And the client was then ultimately able to complete the deadline and didn't incur any other costs that they would have had associated with the development finance taken out for the new build. So again, complete today with conditions to follow afterwards. It's just another example of how we work together as packager and lenders. It's absolutely crucial to have that flexibility, but you've got to understand it to identify it and negotiate it. It's absolutely crucial.
Excellent. And both of those cases, again, happy clients, happy brokers, happy lenders. They're deals that have gone through and are nice and clean as well. So having both that flexibility, but also, as you say, that knowledge to know what could be a problem ahead of time is crucial in those scenarios. So excellent examples there. So we've had some questions coming through from the audience. So please keep them coming through. We will do our best to attend to them all as we carry on for the next, we've got about 40 minutes or so left of the session. So a nice one to start us off then, from an anonymous attendee today. How has COVID affected the short-term market? Matt, do you want to start us off with that one?
I think it's pushed more opportunity towards that short-term market. I think we're certainly in the commercial space. You guys will be able to, and the attendees will be able to walk up and down the high street, see some vacant properties, unfortunately, and that is quite a sad thing to see for some people. However, it will drive bridging deals, because actually people will grab hold of the assets, they'll refurbish them, they'll put them back out to let, they'll look to obtain planning and convert property. But also as well, just naturally, I suppose the world has slowed down a little bit. Solicitors have slowed down, lenders have potentially slowed down, and there is now a need actually for the old-fashioned bridging, which is just get this done quickly for me. And that's where bridging has really come to the forefront, to avoid unnecessary fees or to avoid transactions going south basically and not proceeding just due to time scales. And that's certainly been evident in what has been a relatively buoyant residential market within our regulated and long established bridging proposition. So yeah, it's created opportunity in my opinion. Again, it's about broker partners such as Kris understanding where our appetite sits and what we're prepared to go to do. At one time during the pandemic, obviously, loan to values were reducing until people knew what the outcome was going to be, I suppose, of the pandemic and where things were going to lie. But yeah, obviously ourselves and MT, I know, held out, if you like, and stood strong and produced some good outcomes during the pandemic.
Thank you. Gareth, from your point of view?
I think it's given everybody a few more grey hairs, for definite, and some weird and wonderful hairstyles, as I'm sporting at this moment in time. I think, look, opportunity comes from difficult situations, I would suggest. So where borrowers and the consumers looking to be more opportunistic in a situation like Matt alluded to with, deserted high streets, commercial into resi conversion, whatever it may be, a savvy borrower has an opportunity because of the situation we find ourselves in. It's probably made your lives a lot harder as a specialist distributor from that perspective, because, as Matt said previously, appetites of lenders changed and fluctuated all the way through. Some lenders pulled out of the market completely, which obviously made for a disjointed market from a transactional point of view. I think the mainstream mortgage market as a whole has evidently slowed down, because they are now having to work on structures where half the workforce is still working from home. They didn't have the technology in place to be able to support them straight away. Valuers were being furloughed because of health risks, for instance, and that side of things. Solicitors, again, working from home. So it became a very disjointed marketplace to get something through smoothly. So, and going back to what Toby said before, if you didn't know the market and you didn't know the parcels of the market that were working or how they were working, you would have found it very hard through this pandemic to actually get a case over the line from start to finish, because ultimately there was too much disjointed elements to it. So I think we certainly learned that we wanted to be very transparent and open with all of our partners who put business with us, to make sure they knew exactly where we were from a pricing point of view, exactly where we were from an appetite point of view. Continually, I think we monitored it every week as a management team, but we monitored it from an outward perspective every month or so, just to say, this is where we are, this is how comfortable we are at this loan to value, and this is the product that's going to stay from that side of things. So that was very critical from that side. To make the appetite was lying through that side of things. It's been fun, emotional fun.
Yeah, that's one way of describing it. Toby, anything to add to that?
No, they pretty much said everything. It was tough, it's hard, but the outcome and where the land lies ahead of us, I think actually it's improved us and made things kind of better. So from the negatives comes the positives, I think. And that always happens in these times of kind of economic issues, a pandemic which no one ever expected would hit us. But what we saw a lot of is the bridging market in the specialist game that we worked in, especially commercial, helped prop up that market. The two gentlemen here, these lenders, they stayed throughout it, lending to their own parameters and what they had, when a lot of others didn't. And that every lender is different. They have their own motives, and that's amazing. But they supported us throughout this time. Business volumes grew as a result. We had to do more on bridging as a result of the limited term options available, because obviously people weren't trading. But no, I think we're in a better position. The only kind of major observation you see is there's a lot of newcomers in the bridging market in terms of lenders. It's seemed to be the opportunity. And it's about actually seeing is there truth and merit in that, in the artificial type market that we're currently in. So look, we'll see how it goes. It is kind of month by month, but no, I can only ever see positive things.
Okay. Good. We had a question in from Maria. So Toby, I'll start with you on this one. From Brookman Mortgages. How do I best generate bridging finance opportunities, and how's best to prospect or find clients?
It's a good question. It's actually simpler than what most people would think. You've probably already got cases on your desk which you don't actually realise that are there. Your current pipeline, your active pipeline. Now, a lot of cases, as you've seen at the moment, the average time to complete has gone up. There's issues, there's more pedantic nature around, lenders' policies regarding criteria on the term loans. Now, there's a clear, easy option there with bridging finance as a solution that can allow you to complete the transaction quickly. We're coming up to the second extended deadline from stamp, and most term loan lenders now, realistically, are going to struggle to complete by then. So again, cases you've currently got on your desk, there's definitely opportunities within those. All you've got to do is probably pick up the phone. If you've got a problem with any of them, speak to one of our experts, and there's definitely a potential for a solution there. Other than that, obviously you've got your existing client base. It can be as simple as, campaign out towards those directly, or even asking them if they know of anybody that's currently having issues with property finance, because it is happening. The market has got those issues there, whether it's a property that's downvalued, whether it's a property that requires works, whether there's Japanese knotweed, whether there's, half the roof missing. There's all these different eventualities which terminal lenders will decline a case. And that doesn't mean the case is dead. That case is not dead. And there's the opportunity with bridging to allow them to complete on that transaction. So, just revisit your existing client base, ask the question and ask if they know of anybody who's currently going through struggles. And that can be on any type of property at all. I'd probably target more specifically your multiple property customers, because obviously they're going to transact a lot more and they're probably going to have that type of business. So you can earn kind of repeat on it. Other than that, I'd probably say social media, again, it's one of the biggest active tools, whether you use LinkedIn, whether you use Instagram or Facebook. That's not a plug for any of those sites, by the way. But the reality is you see a lot more developers, a lot more landlords, showing their successes, showing what they do, why they're doing, why they love it, because they're trying to build their own brand of whatever that might be. But the beauty that you've got with social media platforms is you can actually get direct access to the key people. If you cold call, email, send a letter, you're not going to achieve the old ways of marketing and get in front of them. Whereas now you can actually DM them. You can comment on their posts on a regular, consistent message basis. You can go to property forums. You can start contributing in there. There's a lot of landlords in the country. There's definitely big opportunities for you to nurture that. The list could go on, so I'll probably just keep it to those main three ones. As the new dawn hits us for the tech world, I just think those are going to be key for you as a broker.
Excellent. Anything else to add to that, Matt or Gareth? Toby put quite a few out there.
Yeah, I think just stripping it back really basic, just talk about bridging and use it as that forward planning tool. So rather than it being I suppose, and Gareth sort of alluded to it when he's referring to education, rather than it being that sort of product of last resort because we need to do something, actually use it as a product tool, forward planning tool. So if you've got a developer client on the books, have they considered a developer exit option? If you've got a client who's maybe prohibited or limiting their own capacity for growing a portfolio because they're intent on buying a property for cash, refurbing it, then refinancing, pulling the money and going again. Well, actually, could they run 2 or 3 projects at the same time with a little injection from bridging finance? And rather than using all of that cash, maybe use it as a partial deposit. So I think it is just a case of talking about it and being positive, and then using it as that forward planning tool would be the one message I really want to get across, I suppose.
Okay.
I think Toby hit the nail on the head a little bit there with social media. Visual and how you portray a product visually is very critical, I think. I think if a broker's going out there trying to search for something, the best way to do it is show what that something is, because ultimately if the client probably doesn't know that they have a need for it because they don't know what it truly is. So if you do a case study, a quick synopsis case study, or you do an advert that has the bare bones of what that transaction was, whether it was a refurb, renovation, commercial into resi, whatever it may be, you get that visualization then of what that transaction is all about. They wouldn't have known that that was a bridging deal, but they would have known it was a transaction. So you highlight that element for it. So I would very much say, did you know I can help you with this transaction? That doesn't have to be badged up as bridging, doesn't have to be badged up as development. It's this transaction. And then it really does open up people's eyes from that perspective. I'd say the other thing as well, a little bit of old-fashioned telemarketing, picking up the phone, speaking to builders, estate agents, architects, whoever it may be, in that sort of space where bridging is quite a relevant tool from a refurb, renovation and conversion point of view. That there is a database of clients who are using funding for something, an extension, a loft conversion, whatever it may be, and they haven't thought about bridging as an appropriate tool for it.
Excellent. Some really good comments there that hopefully you guys on the webinar today can take away and generate some more business for yourselves from there. So excellent. Thank you for that, gents. We've had a question in from, this one's from Anthony. Got a development customer who, due to COVID, has not been able to complete his build. He needs to repay an existing bridging loan of 2 million by the end of the month. Is that something that you'd be able to help with? Gareth, do you want to start us off with that one?
Yeah, definitely. Look, obviously you need to understand a little bit more about the transaction, but this again is one of the features that's come out of this pandemic. Unfortunately, the world slowed down quite dramatically in certain areas, which then did have a big impact on people being able to finish developments or anything along those lines. So they are naturally coming to the end of a life of their loan with somebody, so they are now either sitting there worrying that they can't get out, they haven't got their natural conclusion sorted. So we'll be more than happy to have a look at a transaction that's needed where it is a rebridge of a situation like that, where there's an honest reason for not hitting. I knew that was going to happen at some point. Had to happen to one of us. So naturally, there is empathy for transactions in the space, so there should always be the support. Your best thing to do is talk to you guys about the transaction, give a further indication of detail, and then there's a deal to be done there, definitely.
Excellent, thank you. Matt?
Yeah, I think the developer exit market has really sort of accelerated, as I say, over the last 12 months, delays to supply chains, site closures, even just marketing campaigns where people maybe haven't been able to execute their original exit plan. So in answer to Anthony's specific question, no problem at all. I think it's an area that Crystal is certainly well versed and Shawbrook are well versed in. And as Toby's already alluded to with a previous example, more than happy to help once we've got the relevant information to make a decision.
Excellent. And Toby, I'm sure that's a deal you'd like to take a look at.
No, of course it is. Of course it is. The key things for me is just understanding, is there recent valuation and kind of what stage of the work's currently at. But the other guys would ask the same questions, but just please send it over. Me and the guys are happy to have a look at it and we'll discuss it further. Excellent.
Another specific one that's coming on the chat. So Matt, I'll throw this one to you first of all. Client, this is from Anthony. Client owns a nail bar with 2 flats at the rear with separate access, but all on the same title, unencumbered. Yeah. Wants to raise capital to develop a 2-bed flat on the same site. Got planning already. Value of 150, looking for about 80,000. There is additional security available in the background as well. Is that something that you'd be able to have a look at?
Yeah, absolutely. I mean, we can certainly consider that under our heavy refurbishment. Maybe adding a dwelling to the property, so it would certainly qualify under that. But yeah, we can look up to 75% loan to value against current value. And more than happy to help. We obviously want to make sure that the client's got suitable experience of carrying out similar projects. But yeah, more than happy to help. And if the client wishes to retain the property as well on the outset, then we're happy to slide that into one of our semi-commercial term deals as well.
Okay, excellent. Thank you. Gareth, is that something MT would consider?
Yeah, definitely happy to have a look at that type of transaction, whether adding to an existing dwelling or something along those lines. We can either do it as one lump sum out if there's enough equity within the property, or look to do some stage funding to support it as well. So whatever works better for the client from that perspective. So yeah, definitely a deal that we would happily look at.
There you go.
Quite a common theme.
Yeah, thank you. Toby, anything to add?
No, just very simple, very easy deal for us. That's our bread and butter all day long. So yeah, please send it in.
There you go, Anthony. Deal made. So thank you for that. So Mark from Affordable has asked, is there a decision in principle or some other confirmation that can be provided so a customer can go to auction, possibly, or knowing that they can bid on a property, knowing what loan and LTV limits are available? Matt, do you want to start us off?
Yeah, happy to. Yeah, I mean, clearly we've got at a very basic level, we've got an online calculator that will provide the parameters as to how much we're able to lend against certain asset types. That will provide indicative terms for the clients. If the client's happy and they prefer to go to the next step and have a credit back decision, then we do have a fantastic portal that can get instant credit back decisions I'm sure the guys at Crystal will testify, it takes about sort of 10-15 minutes to get a credit back decision from us, assuming that the client meets criteria. If they don't, and there's something in the background that we need to take a closer look at and assess on a manual basis, then we can do that within 4 hours. So yeah, very slick in terms of getting to the crux of the matter, and just giving the client that confidence that they can stand in the auction house knowing that funding's available, subject to a full underwrite of a case, of course.
Great, thank you. Gareth?
Yeah, exactly the same. So we can provide some indicative terms. So at a high level, just an indication of what we could do from a funding perspective. And then again, we offer an offer in principle that we can provide, which is obviously looked at from the perspective of understanding the transaction and the parameters around the security. Again, that then could be used. We do sometimes get clients who come to us who are really, really well switched on. They've come to us at the beginning of the transaction that they're already envisaging, and we've done almost all the legal work as well, up to the point of then having the property valued if they've been repeat customers as well. So you can go down the whole route of actually getting everything done, bar the valuation side of things, and a few points on the legals which need to be put into different positions. So, there's varying different degrees of how you can help, but certainly there's lots of help there.
Excellent. Toby, anything to add to that?
No, they're definitely on the right kind of tracks, really. I think, we at Crystal, we do provide a similar service. It's probably just before that point when it goes to lender. So we would provide a Crystal quotation, which would have all the relevant details and terms. But as a part of that, what we would insist is probably have a conversation with the underwriter. The reason why I say that is because your client could be looking at a specific property, and depending on the property type and what he's got planned for the property, it's going to completely impact the loan to values, the rates, the terms that are actually available, what lender's got an appetite for it or not. And it does vary substantially. So the big thing would be find the lot number, contact us, speak to one of the guys in detail at length. They'll give you the broad brush of roughly where the market's at, so the client can understand what their parameters are, give them the quote that actually meets the needs of the customer. And then if they win, then we can crack on.
Okay, excellent. So I think that leads us into a question that we've had through the Q&A from auctions. Is BMV bridging still possible given the current climate, or has an appetite for this dropped off or disappeared for now? Gareth, do you want to take that one first?
Yeah, look, if there is a true discount being had on a transaction, so there is a true below market value transaction happening, then we would lend against the value up to 90% of purchase price, provided it fits within the standard criteria of our loan to values. So yeah, more than happy to continue to look at these transactions. It still is a common occurrence. There is a rationale behind it, and it makes sense. Then yeah, easy one to help with on that side of things.
Excellent. Matt?
Yeah, again, can be considered. I think it depends on the journey of that property. So how has the client sourced the property? Has the property been exposed to the market and a marketing campaign? It's been in auction and there is a true discount there. Again, yeah, there's a clear rationale for us to support. I think it's all about just understanding how has the client sourced that property, how much do they believe it's worth as well, and then again, what is their exit? Are they reliant on it achieving a full market value in terms of the exit?
Okay. Toby, is that common for the rest of the market?
Yeah, well, it follows suit, definitely. The lenders that do offer the BMV, it's all got the same due diligence that you need to understand how the client acquired a property below market value. Obviously, the only kind of reservation would be the auction. If you are actually buying it from auction and it is, believe it to be BMV, just be cautious on that point, just because it's sold at auction for that price for a reason. That's all. So that'll just be my one little note to add to that.
Yeah, excellent. I think the key there then is if there is a true discount and it is a viable reason for a discount, then there's a deal to be done. Yeah, excellent. Thank you. Another specific one. This is from Bharat. Can facilities be provided for a Hindu place of worship? I think we'll lead on from this one to see what kind of securities you wouldn't accept on bridging. So Matt, do you want to start us off with that one?
Yeah, I can do. Yeah, regrettably, we wouldn't be able to assist with a facility on a place of worship, and I think it leads us sort of almost back to the that broad criteria point, really. So there are some assets that we don't have an appetite to lend on. I'm sure Crystal can provide the solution with other lenders, but land, for example, holiday parks, petrol stations, equestrian, property and agricultural property. So it tends to be securities that are fairly one-dimensional, and there may be a limited market to exit that type of deal. But again, Toby's team are well versed in acceptable security for the bank.
Thank you, Gareth.
Yeah, look, I'd echo the same sentiment as Matt there. I think it's unique properties are always going to be a sticky point, because ultimately you've got to look at how a client's going to get out of the loan and what's available to them from that perspective. So obviously you have to look at where the end goal is, because our lending is only up to sort of 24 months. So you have to know where the natural conclusion is for that transaction. And that's going to have a lot of bearing on the uniqueness of an asset, and then that ability to be either sold on or refinanced. So it plays a big part from that side of things. So things like land and places of worship and golf courses, those kind of things, which have a very unique element to it, just not really for us.
And Toby, would you be able to do anything with that one for Barrett?
Yes, we can. But again, it does cover nicely on the points that were both made by Matt and Gareth. It is a very restricted appetite. We are only talking a handful, maybe even one lender or two lenders that we have on panel that would even consider that type of property. Realistically, they're going to be at 65%, up to 65% kind of LTVs, but they are going to be valuing on a 90-day valuation basis. And it's not like your traditional bridge loan where you've got a retained period or a service period up to a set deadline. It's more of an open-ended type bridge, like a term loan, where they'll end up having to service the interest, just because, as Gareth alluded to, what's the exit? So it is more like a term loan than technically a bridge, to be honest with you, just because of the limited appetite in the marketplace to refinance that away on a term basis. There's not many options, I'll be honest with you, but the other awkward property types, there's probably a bit more options out there in the wider market, but priced higher as a result, and LTVs reduced as a result. So yeah.
Excellent. So there you go, Barrett. Even if it's a no from a number of places, Toby's still got a deal that can help you out with that one. Excellent. Thank you for that. But again, a couple more questions coming through on the chat. A ground up property development in London. Client is an architect and has builder ready. What kind of LTV is available on this? Is that something that you guys could comment on, or is that more for development side of things? Matt, do you
we wouldn't do it.
Okay.
We don't do ground up. We talked about experience and expertise earlier, and I think that's one of those areas you definitely need, and it's not one of our fortes, unfortunately.
So yeah, we as a bank, we can certainly look at that. Again, it would be someone with expertise in that development division. So again, Toby and his team have got links into our development finance team, and happy to take a look at that one. Absolutely.
Brilliant. And then from so leading on from that one, client looking to buy an existing property that's unfinished, or it's in need of bringing down to first course and then rebuilding back up again. Again, that looks like a very development type deal. Is that something else that you could consider then, Matt? Yeah,
again, on the development side, it would fall outside of the parameters for our heavy refurbishment, because as I say, it's a sort of start again job. But yeah, on the development side, assuming clients got experience, then yeah, Toby can look at that one certainly.
Okay, excellent. And Toby, I think I'll direct this one to you. When does refurb become heavy, and do all lenders agree on that point, or do they differ?
Majority do follow the same principles. So you light refurb is you kind of no change of use, no planning, no structural works. Those three parameters are kind of industry standard to a degree. Now, each lender, as you say, have got their own appetite and their own interpretation. As I'm sure when you get on to Gareth and Matt, they'll explain a bit more detail about themselves. But some lenders won't load rates, they won't restrict LTVs going from light to heavy, but they won't fund the works, and some lenders will fund the works. So again, it's all about understanding what the client wants, identifying the difference on each deal of, does this actually fall under light refurb, or does it fall under heavy refurb, and then how we price that up accordingly. because it's all going to come down to the individual scenario. It's case by case, definitely on that.
Excellent, thank you. Gareth, anything to add to that?
Yeah, look, we have an element of flexibility, as sort of we spoke about earlier. Generally, we would look, like Toby said, anything with building regs and planning permission orientated work, we would class as a heavy refurb transaction. That being said, if we're comfortable with a small extension out the back that falls under planning or a loft conversion or anything along those lines, we can sometimes look at those in a more sympathetic light towards our loan to value parameters. But when you are looking at a bigger transaction in terms of the floor space add or whatever it may be, then obviously we are more restricted to 65% on our heavy refurb from that side of things. But there is a lot of flexibility around it, but ultimately it is the same parameters. You know, structurally orientated work would fall under heavy and non-structurally orientated work would fall under light.
Excellent, thank you. Matt, anything to add?
Yeah, very, very similar. Yeah, a basic refurbishment would constitute light. I think one of the things that the bridging market has probably done over the last couple of years is perhaps simplify themselves. So again, historically, we used to have a light, a medium and a heavy. So we simplified it to light and heavy. But the consequence of tripping over that line into heavy, it often isn't that great. It may be, I mean, for example, the difference between our light and heavy refurbishment is 10 basis points a month. It's 0.1 per month. It's not a huge significant jump. The only other difference in the background, and this is what Toby alluded to, is it's about that underwrite piece. So actually, if you're straying into the heavy refurb and you need planning and you need building regs, have you done a similar project before as a client? And just demonstrating you've got that experience to mitigate any potential hiccups that could occur. You've been through the process, you understand the need to obtain the relevant consents along the way.
Okay, excellent. So hopefully that's nice and clear. And so anything structural tends to fall under heavy, anything non-structural tends to fall under light, which tends to summarize the rest of the market. Now that said, on the first episode of this series, we did focus on development finance. So that's available on our website. So if there is anything specific about development that people need to look at, then there was a lot covered on there. So we will be happy to help with those queries as well.
Chris, can I just, quickly follow on from that as well? I think one of the things that brokers need to make their clients more aware of when it comes to the heavy refurb as well is where that value add actually truly happens. Because you get a lot of people will come to you. So we obviously offer a drawdown facility. We get a lot of clients trying to come to us when they're looking to convert a single residence into a HMO, for instance. And then they're trying to work out where the add value is. So that's something that I think as a lender, it's critical that we know where and when the add value happens so that you can then release further funding. But also I think it's critical for brokers to understand it as well so that they can manage a client's expectations. You know, if somebody is doing a refurb into a HMO and there's £20,000 worth of works and they're trying to do a drawdown facility, it just doesn't quite work because you're naturally going to come to the end of the project before you actually truly add that value. So it's something for them to be aware on that side, I would say as well.
Yeah, that's a really good point. We saw a scenario fairly recently where a client had spent 50,000 on a property and the property had only increased by 10 or 12 when the value went back out because the work that had been done wasn't necessarily value add work. At the end, it was all achieved, but midway through, it was very difficult. And as they were in with another bridger that didn't want to do any further advances, that was quite a difficult situation to try and help the client with. So I think that's a really good point. Thank you. We've had a question from James at Epsilon. Is there a sourcing system for bridging finance? Toby, start off with you with that one.
Simply put, no, not really. Not one that will give you what you need to achieve from bridging market. You know, there is rates. Every lender has the products and the guides of where it goes to. However, it's actually the scenario that dictates where it's placed and how it's placed. So understanding the transaction, understanding what the outcome is, and then being able to achieve it through what the client has available to kind of do so. So simply put, I don't believe there is. And we do a lot of bridging and we do a lot of sourcing. There could be softwares out there that do offer bridging as a sourcing tool, but don't always chase the rate is probably what I would suggest there, because the rate isn't always right. It's actually the scenario and the outcome for the customer when it comes to bridging, because if you put them with the wrong product, it could end up really bad. And then the customer experience of bridging, because traditionally, anybody who's been working in bridging for 10 years will understand that bridging used to be the word of negativity, whereas actually now it's the solution, the savior, and actually people build business models of flipping properties, converting properties, using it as a tool to facilitate it. So, I would just probably use companies like ourselves. My team is very expertly skilled, trained in all the lenders we have on panel. You literally can book an appointment with them, have a 20-minute conversation, all the sourcing's done for you then and there. I would, that's my opinion on it.
Yeah, excellent. Anything to add, Matt, Gareth?
I think I would agree that there are some systems out there currently, but you've got to be wary of them because it is an unusual transaction most of the time. I think a sourcing system probably works a little bit better in the standard vanilla regulated arena for bridging, but where there's an element of a quirk, as Toby alluded to there, you're going to get a pricing point. You're going to chase the best price, and actually it might not be suitable because they don't fit every box that's needed for that lending, and at that sort of pricing point. So you have to be very careful.
Yeah, excellent.
Yeah, it just goes back to the points we've mentioned. Really, there's probably far too much flexibility to be able to hone products down and feel, we've all used the sourcing systems, and you'll get your filter box and you'll tick, 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 tick. And one of two things will happen. You'll either get lenders sort of saying, yeah, we're very broad, we can consider all of this, or actually, yeah, we don't really fit into that little box, so keep us off there. So you could be missing opportunities, in effect, in my point. It is a relationship play. It's probably what myself and Gareth get out of bed for, as sad as that is, every morning, shaping deals and pushing them forward and coming out with the correct outcomes. And that's still the case.
Yeah, excellent. I think Toby hit the nail on the head earlier when he mentioned that it's not just about price. It's not just the interest rate that brokers need to be chasing when it comes to bridging. It's the right lender for that right scenario. And again, the scenario I touched on where the client had taken a loan from a typical bridger that didn't want to do any further development work, it had left the client in a really difficult position, and that was purely based on rate chasing. So it is about that relationship. It's about finding a lender that's going to get you to that solution, because bridging only works if you can actually get out of it at the end. So that's an important factor to put in. And again, great comment from Anthony on the chat there. No sourcing systems, please, as it could then become money supermarket. At present, brokers have the edge and access to lenders. I think that's it's where brokers can really add value to the client relationship. We had a question come through saying, I'm seeing a lot of people talk about completion in hours or days on bridging. So just how realistic is that? Gareth, do you want to start us off?
The reality is, yes, bridging can be done very, very quickly, but you have to have the right parameters there for you. Cases completed within hours are generally transactions that have failed somewhere else, where there is already the legal process going through, there's already a valuation in place, and somebody is just mopping up an issue that's happened with regards to an existing transaction. That being said, from start to finish, we have and do regularly turn around and complete deals within days. Sort of a week it can be easily achievable if everybody's working in the same way. But I think a broker needs to make sure that they are dealing with the right lender. They have to make sure that they have told and managed the client's expectations around valuation, around legal process, making sure that the client's solicitor is on board as well, because inherently that can be the big problematic point to getting cases completed quickly, is that then the client has utilised the wrong solicitor for that transaction. It may be a family solicitor or something along those lines who isn't versed in bridging finance. So you do certainly have to get all your ducks in a row to be able to complete a transaction quickly, but it is achievable. But they don't always happen.
Fair point. Matt?
Yeah, I think it's probably the exception rather than the norm. I think it's a good way for lenders to showcase what they're capable of. But I think, as I say, as Gareth alluded to, it's making sure that all parties are joined up. So yeah, Crystal will obviously be integral, but actually, has the lender and the lender's valuer got capacity? Has the lender solicitor got capacity to cope with that transaction and to allocate adequate resource? And that is all part of the sourcing. Going back to the last question, really, if a valuation is available, is a retype available? Can the lender get reliance on that if necessary? Are we able to indemnify against any sort of potential issues? And as Gareth alluded to, if it has gone sort of wrong somewhere else for whatever reason, is that something that the lender has the appetite to overcome? But yeah, again, we will complete deals very quickly. We can do them in weeks, days. We've had some recent press releases out there, and of course, all lenders are pushing hard to embrace technology and help that smooth the process as well. And that's certainly something that Shawbrook will be focusing on and is focused on moving forward.
Brilliant.
I think the need for speed as well is far removed from where it used to be. I think it's a certainty of liquidity is a bigger relevance than actually getting a case complete within time. It's knowing you can get the funding in an appropriate timescale, and you're confident in being able to fulfill that transactional need rather than having to complete a case very, very quickly. Although, as I say, they still do happen.
Yeah. Toby, anything to add to that?
No, they pretty much mirrored exactly what I was going to say. I think, the stars have to be aligned. It's easy if you've got a pre-existing val and, legal work has already done. That does give you the chance of getting it completed in the hours. It's the select few, as I think Matt alluded to there as well, that actually do it as the norm. In terms of case-wise, I think, you're looking a week realistically. But look, as I always say to every broker, it's all down to the customer providing the information as and when we request it, or as and when the lender requests it, and it's about making sure you're on top of the transaction. It has to be a priority for you on that day or a couple of days that it takes to actually complete it. So it just means you've got to be prepared to drop a lot of your other pipeline stuff that you might have as a broker to actually achieve it. So it does take commitment from all parties. We do it a lot in terms of, we get cases which fall down and we get that call. We will drop what we need to do in terms of an underwriter's pipeline to make sure they can service it, give the broker what they want, the customer what they want, get it over to the case manager and get it completed. But, as I said, stars have to be aligned. It all has to be ticking the right boxes.
Excellent. Thank you. We're running short on time, but I just want to squeeze one more attendee question in if I can. A client who wants to buy a property to use as a holiday let, but it needs a bit of work first. How would that be looked at by lenders? Matt, do you want to take that one first this time?
Yeah, I'm happy to proceed. Again, crucially is the exit. Shawbrook will do holiday let mortgages on the long term. So take myself back a step. It depends on what works need doing to the property. I'm assuming it's a fairly sort of standard residential home in a nice part of the world if it's going to be pitched as a holiday let. So where does the exit come? Is there a holiday let provider? Do you want to do the exit with Shawbrook? Have we got assessment? Have we got buy-in? Have we got an agreement in principle for that and a clear view on the exit? But absolutely, certainly sort of bread and butter and something that's quite popular at the moment. So yeah, residential property up to 75%, potentially 85% if it's a light refurbishment that they're doing.
Excellent. Thank you, Gareth.
Yeah, definitely will touch it. More than happy to have a look at that. And I think it's going to become a bigger trend as well. Certainly has become a bigger trend when people are looking at diversification of their portfolio, like I think Matt alluded to earlier. So certainly, yeah, it's an opportunity that we would more than happy entertain. Excellent.
Toby, anything to add to that?
I know pretty much the same as what they both said. As you can see, the term loan from our side, the term loan lend appetite is increasing. So again, little light refurbs like this in terms of your bridge it to purchase and then refi it out to keep as long-term investment is definitely going to be high demand, at least for the next 6 months anyway.
Yeah, excellent. Something like that would always, bridging in general comes down to the exit as well. So as long as there's an exit mortgage available, if that's what the client planned to do, then it makes the transaction a lot easier from there. So brilliant. Thank you for that. So just to finish up then, gents, I know we're running over a little bit on time there. So can I ask each of you, what has been your favourite deal to fund so far this year? So Gareth, start you off.
Oh, do you know what? I'm going to say it because it's a new area for us, but we had our first, it was actually with you guys, we had our first inquiry that we received on a regulated basis. So it was the first inquiry we took and issued indicative terms on last year. We actually issued the terms, but we completed the case this year. But because it was our first loan, it was the first set of terms, there was a lot of pride and sentiment around that one. It was a downsized scenario, so they were raising money out of the property from that perspective. So yeah, it was a nice transaction. They were looking to repay their existing lender on it. So it was a nice transaction to get over the line because it was the first one that we did as our first set of terms on the regulated side.
Excellent.
It was a straightforward deal, but it was a nice deal.
Yeah, favourite deals don't always have to be complicated ones. It's just something that sticks out and is memorable. So it was nice for us to get that first one over the line with you as well.
Yeah,
on the regulated side, of course.
Yeah.
Yeah. Matt?
There's two probably that spring to mind, if I may. The first one was just a very basic refurbishment, light refurb of a residential property, 75% loan to value, nothing untoward. The case was about to draw down. Back in February, we relaunched our 85% bridging product. So quick call from the broker. He said, Matt, look, the client's brief was to borrow as much as they could towards this transaction. Just seen you've released 85. So a little bit of running around in the background. We managed to get the offer reissued and then still completed on time. But it just meant that the client didn't have to borrow money from family to get the whole transaction completed. And she was chuffed that she could fund it independently, I suppose, on her own merits. And then deal number two was a developer exit that we received an introduction from Crystal for. We had to step in when another lender was sort of unsure as to whether they wanted to proceed. So it was post-offer, post-valuation, as I understand it, and it was a race against time to make sure the client didn't incur even more sort of fees for running over on their development facility. So yeah, great sense of pride in getting that one over the line for the clients.
Very good, thank you. And Toby?
Mine kind of touches on a point that we made before about timescales, about a broker being let down. This completed quite recently, but it's a testament to the use of combination of tech and using our expertise to be able to provide the solution the client needed. Got let down by existing bridging loan lender, 5 days to complete. The broker came to us on the Monday, but he came to us via our new broker hub that we've got on our website, where he managed to book an appointment with an underwriter the same day. I think it was within an hour actually. That was actually had the appointment, completed the understanding of the details, understood the scenario, had the app in within 10 minutes of that conversation. That went over to kind of a case manager. That case manager then obviously got the legals instructed immediately. There was an existing VAL, but they were not on panel. So we managed to do an AVM desktop VAL, which passed the relevant confidence ratings as well as. So combination of the existing VAL and the AVM, we managed to then complete that on the Wednesday. So came in on the Monday, completed on the Wednesday, 48 hours, but exactly there he is. Ricky's just stood up, there he is. It's a testament to kind of what we do and how we want to work with brokers. So that's why it's one of my favorites, because it's so recent in my memory.
Excellent. Some great examples there of lender flexibility and also brokers being on board to provide information and to get things moving very quickly. When everyone's on the same page, obviously it makes the transaction a lot easier and a lot smoother from all parties. So that we've run out of time on that one. So from me, massive thank you to you all for attending today. It's been really interesting. There's been some really good things that have come out from there. We've answered some questions on specific deals. So hopefully we've made some deals for the brokers that are attending as well. So again, massive thank you from me, and I look forward to seeing you all in the pub soon, after I've had a haircut, of course. Thank you. And to all the attendees, to all the brokers watching, so thank you for tuning in. We have further Dealmaker webinars planned, so keep an eye out on our social media and on our emails for that. And in the meantime, if you want to follow up on anything that's been discussed today, please feel free to contact us. I know our marketing team will be sending out the CPD certificates and further information from there. So all that's left from me is thank you for attending, and I look forward to seeing you all soon. Thank you.
Perfect. Thank you very much.
Right. Let's go.